Ladies and gentlemen, boys and girls, and children of all ages, welcome back to the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming in to give you guys the live experience of the Investor Show and to also give you guys and girls um, a live talk market update. And we're going to talk about some good stuff today for the people that are catching the playback. So, are you as you're coming in live? If you're catching this live, stop by and feel free to drop some comments. Tell me where you're from. We got a lot going on today, a lot of drama in the market. Hold on here. We had someone already comment. Jim, what's going on, Jim? He said, good afternoon. I look forward to your live stream. Abraham from Houston, Texas. We got Abraham back in the house. But we're going to give people a little time to come in. We got some very good topics. I didn't put this in I think I put it in the description box. I think I kind of missed it when I put this in the description box. But I'm going to talk about airline stocks. Remember, we were talking about the airline stocks and stuff like that. We got Kevin coming in from DC. He said, I love the live streams. Appreciate it. Jim coming in from Toronto, right? Coming in from Toronto. We got Canada, we got DC, and we got Houston. Let me put you guys up on the screen, all right? So we got Abraham here coming in from Houston, Texas. Nice to see you there, Abraham. We got Jim coming in from Toronto. We got Kevin coming in from DC. He said he loves the live stream. I love it when you guys and girls tune in. I watch the numbers, and the numbers don't lie. People lie, but numbers don't lie. You guys and girls actually tune in. Someone bring on some guests. Nice way to go. Then we got Yvonne coming in from Minneapolis. What's going on, Yvonne? Nice to see you back on the live stream, supporting as always. Woke one coming in from Virginia. I think your profile there is pretty funny, with the tiger. But we got Woke one coming in from Virginia Beach. And we got Herloom Financials coming in from West Palm Beach. What's up, Prince? What's going on, Herloom Financials? Also, we got Arizona. We got Al coming in, or he or she coming in from Arizona. I remember somebody got mad at me one day saying, hey, I'm not a male, I'm not a female. I'm like, hey, I don't know. I just see a stream name, no picture. So here we going in. Miss Amber Moe, she's coming in from Philly. Happy Monday. How you doing there, Miss Amber? Hope you're having good a good quarantine week or whatnot. Said that Miss Amber. Next we got Keisha, NY. Okay, Miss Keisha coming in. Oh, he said he. Okay, good. Thanks for letting me know that. Thanks for letting me know that, Al. Argentina, Diego from Argentina. So we got Argentina. We got Argentina, Canada, DC, Philly, Virginia, Minneapolis, Texas. We're all over the place today. That's my guy, Max B. I know what Max B at. He down in Louisiana holding it down. So, y'all, we're going to have a very good conversation today. We're going to talk about the stock market has dropped 36% in the last 41 days. We're going to talk about airline stocks. I didn't put that in here, but I'm going to talk about airline stocks today. We're going to do a little dive into airline stocks, and I'm going to leave it for I'm going to cut it out and put it as another video as well. So thank you guys and girls for tuning in on that. So let me apply a little bit of lip chap here. I don't want to be, I know somebody was laughing at me one day about not having enough lip chap. Make sure I got enough lip chap. But today we're going to talk about, I already said that about 5 or 6 times. But today what we're going to do, we have looked at the market shed 36% of its earnings. And people have asked me, hey, has the market stopped? And for the people that's been catching the live stream, what has been my answer? What have I told people about wanting to buy stocks that's jumping into the market now that says, hey, is this a great time to jump into the market? And, and all those other good, great things. So what we're going to do today, we're going to talk about, is the market done dropping? My answer is going to be yes or no, and why. Then we're going to jump into the airline industry, the airline stocks. We know airline has fallen about 60 something percent, right? Airlines said no, yes, 60%. The whole sector has fallen 60%. And we've seen some massive falls in everybody for the most part. But airline has been getting hit pretty bad. Nobody is flying, or people are very non-essential. People are flying. People are cutting off their borders, so it's hitting the airline industry hard. So everybody's been asking me, Prince, what has been a good thing to look forward to? So, um, Gennaro, he said, I'm holding and watching, ready to buy. All right, hey, what's going on? Almost, he's coming in. He's in Denver, Colorado. But thanks for tuning in. But we're going to talk about that today. Everybody is holding, and some people, if you're smart, you're holding and you're waiting to buy. Notice I said waiting to buy, and my answer is no. The stock market has not stopped dropping. Mike says Boeing. Boeing has gotten hit big time. Boeing makes planes. Where you from, Mike? But Boeing has got hit big time. Miss Keisha here, she's from New York. She said, my watch list is crazy. What do you mean by that? Everybody, while you're in this time, you're seeing the market fall down, you're seeing the market drop. This is the time to build your watch list. This is the time to make that list of stuff. I remember people telling me, man, look at Google, the zooming. This is the time to put Google on your playlist, on your watch list, playlist too. But put it on your watch list. Put Google on your watch list. Put Microsoft on your watch list. Put Apple on your watch list. Put some of these airline stocks on your watch list. But be smart and careful. And I'm going to give you guys the exact steps of this. What I've learned and what I've known over the years to watch out for with good companies. Okay, let's go some comments. Abraham said, fingers still itching to buy. Abraham, remember when you said this a couple episodes ago. I remember you commenting. And what did I tell you back then, Amber? Abraham, not Amber. Abraham, what did I tell you about that maybe a week or so ago when you're like, hey, it's the time to buy. I'm ready to buy. Wait. We're still waiting, boys and girls. Mike is from Tampa, Florida. Okay. All right, then Tampa, Keisha. I've been eyeing everything in almost sector. Now, to think about it, don't get too greedy. Stick within your certain sectors, right? Keisha, if you're out there listening, sometimes when you go out there, I know you're looking at, look at all this stuff that I want to get. You got to just narrow it down to a couple. Because just think about it. Something that Charlie Munger said about diversification. He was like, the people that diversify are people who really don't know what they're doing. And I thought about it. I'm like, that got to be the craziest thing I ever heard in my life. What do you mean? I thought everybody says diversify. Don't put all your eggs in one basket. Spread yourself out. And he said, if you really knew Costco's was the best stock going, that you was going to make 25, 30% in the future, if you really knew that, why would you spread your money out? You would just throw all your money in Costco's and make that 35%, right? So with that being said, I'm not saying be that extreme and put all your money on one stock, but don't get too crazy and be all over the place. I remember, I don't know if Beef is in here, but he sent me his portfolio one time. And I think that man had like 200 stocks in there. I was like, man, how in the 200? I don't even know what I ate yesterday. How do you have 200 stocks? Narrow it down and stick within your circle of competency. Whatever you're very competent at. If you know retail, you may know healthcare, you may know the hair industry. Go out there and find those gems in that industry that you know very well, that you have a competitive advantage on, and put your money there instead of trying to go everywhere. Because there's not that many great companies out there that's waiting to buy. So that's what I like to see. Max B said he's looking at AT&T, XPXL, and Coke. Okay, AT&T, that's a big, heavy dividend stock. Coca-Cola, that's a good consumer staple. XPXL, for people out there that don't know, that is a bullish ETF, leverage ETF. We'll get into that a little bit more. All right, Gmo Wine One here, holding and watching, ready to. Okay, Wine. Okay, got it. Okay, he switched over to YouTube. Okay. All right, let me go down this list. Abraham, my watch list has grown 3 times. It should. And narrow it down. She said diversification is important right now. That's true. But think about it, right? Apple and Microsoft, they're in the same sector. Southwest and Delta Airlines, they're in the same sector. Coca-Cola and Pepsi are in the same sector. So some people would load up on a bunch of technology stocks where it's like, okay, are you really that diversified? But if you're like, okay, I want one from every sector or technology or whatnot, then that's a smarter way. But don't get into the craziest things of, having a million. Because I watch some big multi-billion, billion-dollar hedge funds holdings, and they may have 30 to 40 or 50 different shares in there. So some people that's in here maybe have $1,000, $2,000, $3,000. Don't get out here and try to buy every little thing in the world. Narrow it down, stay within your circle of competency. I'm gonna give y'all a quick lesson on circle of competency for the people who don't know what I'm talking about. So I can't remember this book, but in Warren Buffett, who's the greatest investor of all time, that's my investor. In his office, he has this picture of this guy. I can't remember the book title of the book. I did a video on this, where this guy is sitting there and he's watching his strike zone. Right, for my baseball players out there, a guy's holding the bat and he's watching his strike zone. The strike zone is a square. In his strike zone, he said, when I strike at these particular balls, or when I strike at balls that come in these particular areas, I have a higher batting percentage. So his whole philosophy was sit there, hold that bat, and wait for the ball to come across your sweet spot. What is your sweet spot, right? Sometimes people get to swinging at everything, hitting everything, right? So I want to get in the restaurants, this, and this. But you can get maybe 4 or 5 stocks and do better than people who have 30 or 40 or 50, right? Okay. Mike says Tesla. Tesla has a lot of debt on hand. Tesla was struggling during the bull economy. Tesla's going to get beat down during this bear. I'm just letting you know that now. So anybody out there is looking at Tesla, you're going to wait. You're going to get a good price. You're going to get Tesla probably about $100 and some bucks before it's all said and done. So I know it was at $900 just last month or 2 months ago, but they were getting beat down. And when they give out their guidance, their guidance is going to slow down. That's what's going to kill things. But we're going to get into that. Keisha said, I'm not being greedy. I'm just watching. I listen to the news. Keisha, you're right. Right. You got to be greedy at this time, right? What is the old saying? Be greedy when others are fearful. What do you think everybody's running the market right now? Everybody is fearful. It's not that people are catching a coronavirus and dying. It's just that people are looking at, what if it spreads? What if I never go back to work? What is going to happen if everybody's unemployed? What is going to happen in real estate? That's why everybody's running to Walmart buying all the toilet paper, because we are scared of what is to come. Not what's happening, but what is to come. So with that being said, build your watch list, save your money. Build your watch list, save your money. Right? Kevin said Boeing mentioned 2 weeks ago shut down and saw an 8% increase today. Why? I would think the news would cause stock prices to dip rather than increase. Well, Kevin, when stocks are going down, they go down just like when they go up. They don't go down every day. Like, think about it. February 12th, last month, we was at an all-time high of 29,500 on the Dow Jones. Today, before I logged in, we was at 18,500. Did that happen all overnight? Did it just drop every day? No, it went up, then it went down more. It went back up, it went down more. It went up a little bit. It had these little bumps. Just like when the stocks are going up, when the market was going up, it just didn't shoot up every single day. It had days it went up, it went down a little bit, but it came back even higher. It had higher highs in a bull market. Now you are in a bear market. You're going to see lower lows. So yes, the market will have good days. It will have little jolts, but it will go down even further, right? It's just like almost like a roller coaster. You know how you go up and it just drop you down even further and whatnot? So that's kind of what you're seeing right now. Keisha said, yes, sir, I'm on it. There you go. Smart young lady out there in New York, building that watch list, saving your money, and narrow down that watch list to a couple sweet spots, right? Jim, I think, where did Jim say he was from? Let me think. Let me see how good. Jim said he was from, I can't remember off the top of my head. I got to stroll up here. Toronto, Canada. So Jim from Toronto, Canada. He says, you've inspired me to invest. Oh, wow, man. I appreciate that. You inspired me to invest. I'm looking at ETFs that follow the Dow. I found 2, DIA, DDM. One is cheaper and offers a bigger dividend. What's the catch? Give me 1 second, Jim. Let me look up DDM. I'm very familiar with I'm very familiar with DIA already. I'm not very familiar with DDM. You said DDM? I think that's what you said, right? That's what he typed. What I'm saying, what did you say that? Okay, so a quick look at DDM. All right. Give me a second. So let's look at the chart on DDM. So this is one of the things I'm going to do. And I'm going to take all this stuff off. We're going to compare the DDM. We're going to compare it to the Dow Jones. Right? And I'm going to take all this other stuff off. I'm going to take the Bollinger Binders off. We're going to take the MACD lines off. All right. All right, here we go. And we're going to compare it to the Dow in the blue. And we're also going to compare it to, what's the other one that you said? DIA. DIA in the purple. All right. So I'm going to share my screen with you. Jim. Let's go. Here we go. I'm going to share my screen. And we're going to share my. All right. So I'm sharing my screen here, right? So DDM is the candlestick. You see this little yellow and green? This is DDM, right? Now, the blue line, make sure I got this correct. The blue line is the Dow Jones, and the purple line is the DIA. So, as I can look at this, the DIA more closely tracks the Dow Jones than the DDM, right? So you can see the blue line and the purple line, that's the Dow Jones and the DIA ETF. The candlesticks that you see that are green and red, those are that is the DDM. As you can see, the DDM doesn't track the Dow Jones as well as the DIA. So even though, now why it does it and all of the good stuff, I'm not sure. But when you're looking at it, you can see the when you're looking at the way it tracks, it's not as tracking it as well. Okay, let's go back 5 years. Sorry about that. So yeah. So even though it has risen above it in the last 5 years, or let's look at the last 2-year chart, right? You're seeing the candlestick doesn't track it as well as the Dow Jones. So the Dow 30, for whatever reason, the ultra power DDM doesn't track the Dow Jones as well. It's one thing I can look at it. And if you're looking to get into the Dow Jones, it's not tracking it as well. That's one thing. All right. So I hope that helps. All right. So let me go back. I can't even say it. It's that Stefanazzo. He said, what do you think about XPXL? XPXL is Sierra Papa X-Ray Lima. That is a leverage bullish ETF. That is good for taking advantage of jolts in the market, right? It's very volatile. When the market goes up, it's supposed to give you 3 times performance of the bullish market, but it gets beat down in the bear market. I think it will do good in the future going forward, right? So it's a good bullish. It's a good. I use them right now. I use them not quite often, but when I see big jolts in the market, like if we go down 2,000 points, I know the market is going to go up about 500, 600 points. I can throw an XPXL and get 10 or 15% from it. But to just put it in your portfolio and hold it for the next 5 or 10 years, they don't perform that well, but they're good for catching. Like if you catch the bottom of the market, right? Say if you hit the bottom of the market and you loaded up on XPXL, and the market just ran up 2, 3, 4, 5,000 points, over a course of a week or two, then yes, they'll be more profitable than just buying a typical index fund. But you got to be very careful how you use those, right? So they're good for short, big jolts up in the market. So I like to use them as a rubber band. As the market is getting pulled down and that rubber band stops, I like to get some XPXL. So when it comes up, I can get even more of a, what you call it. He said, I already brought in. You never buy XPXL on a good day in the market. You always wait till the market has a bad day. That's the day you get XPXL. Miss Letitia. Okay, how you doing there, Miss Letitia? Letitia. Hello, everyone. I'm new to the stock market. I'm looking to be a first-time shareholder. Congratulations coming in there from Facebook from Miss Letitia. Um, this is a good time to become a good first-time shareholder. I will say that. Not right at this time. I think we got some more dropping to do. And space. SPCE. This was the one. This was the hot stock just a couple months ago, and I actually have some space. What happened with space was there was the hot stock, and I knew if the market crashed, this thing was going to get beat up like I don't know what. So when the market took a downturn, it was very bad. Space right now, it was an up and coming company. Space is in that same space as Uber, so it's going to get beat up pretty bad in the bear market, and we're going to see if they can withstand throughout the long term. Now, this is when your back end means the most. So we're going to see what that back end looks like in the most. Uber, um, Uber Eats may help them survive, but with space right now, nobody's going out to space. I mean, people don't even want to go out to lunch or dinner right now. Well, you know what? Some people might want to go to space, but this is supposed to be a stock that a company is supposed to be letting people take trips to space. It was a hot thing about a month ago or two, but ever since the market's been getting beat up, it's been getting beat up. I think if you hold on to it, you're going to get a better price. Not right now. Heirloom Financials. How many stocks would you say to be in a typical watch list? I mean, it can go unlimited, but I think when people get over about a good 20 or 30, I'm like, unless you're a financial firm, do you really know all those companies that well? Look at those companies on your watch list. Do you know the total revenue of those companies? Do you know how much cash they have on hand? Do you know how much dividends they've paid? Do you know anything about them besides, oh, I heard of Google, right? Have you really researched all those companies? So if you really dig down and do the research, can you really know 30, 40 stocks like the back of your hand like that? I don't think so. So I think the average person can be very good at 10, maybe 20, but over 30, unless you're in some type of investment group or some type of firm. If you're just an everyday person going to work every day looking for a couple stocks, I'll be very surprised if you can do over 5 or 10 that you know like the back of your hand. And what I mean, like you know at the back of your hand, I mean that you know how much cash they have on hand, you know their revenue, you know the CEO, you know the CFO, you know the cash balance, you know their assets and liabilities, you know how much debt they have on hand. That's what I call knowing that watch list, right? And I look at things as knowing what is the network of the company, how much interest does it pays, how much long-term debt does it have, what is the net income, what is the gross income, what is the, do you know those type of things? How can you know that for like 10 or 20 companies? Very surprised. But I think the average person can do 5 to 10, but I want you to know 5 to 10 very well at the back of your hand. And that 5 to 10 can stretch over how many industries, right? 100 for Tesla. Hell, yeah, I can see that. I can definitely see 100 for Tesla, right? Alvin, I'm sticking with Ford. I have a feeling they're going to shoot up with this is all over. When this is all over, also they're working with Ravion. Not familiar with that company. Tesla itself, people love Tesla because it's cheap and it's a big brand and it's cheap. The problem with Tesla that I have in 2008 when they went down to like $1, almost a penny stock, and they got a bailout. Ever since then, they never seemed to really recover. They shot off to $14. I do remember that. It was like $14, $15. They did very well a little bit. Then it just died off in the bull market. You know, I didn't see them. Their dividends were high, but now they're cutting their dividend. It's a I'm not on the Ford bandwagon. I mean, you got to bail out just in the last decade in 2008, 2009, and throughout the bull market, you actually were decreasing, but you paid a nice dividend. I want a stock that's going up and pays a nice dividend, or at least stay the same. Don't decrease on me while you're paying a dividend. So that now we're in the bear market when things are getting tough. I mean, sad to say, but Ford's probably going to get bailed out again, or they're going to get helped out or something like that. So, this not a. I didn't like the way they performed while I was in the bull market. I wasn't too happy about their performance then, so I'm not going to ride with them in the bear market. All right, Keisha, it's so crazy. I'm down, but still up though. She said I'm down, but I'm still up. But no, you don't lose money in the market until you sell. You know, you don't lose money until you sell. Max B, what's going on? Some companies suspended their dividends. Yes, Ford is one of them. And the reason why, you know what, we're going to go through a little dive here for my real followers. We're going to go through a little dive, right? Y'all ready for a dive? Type dive in the comment box. What I mean by we're going to do it for a dive, we're going to dive into some of these airline industry, the airline sector, and we're going to jump into 2 airline stocks. We're going to graze them a little bit. But I guarantee you, when you look around the world, how many people dive into the finances of a particular company, right? We're jumping into their bank account. We're not reason people read news articles and read news outlets and say, "Oh, I know this." No, you don't. Looking at the price is not investing, and that's coin from Warren Buffett himself. I got Warren Buffett quotes for days for obvious reasons, but I mean, hell, I'm studying the greatest investor of all time, so it will make sense. If I was a basketball player, I would study Michael Jordan, Kobe Bryant, LeBron James. As an investor, I'm going to study the top people, the Benjamin Grahams, the Warren Buffett of the world. I mean, if I'm wrong, I'm wrong. But anyway, so I used to do the same thing. I looked at a price and I know that company. I know Nike. You look at the price. Oh, that's a good investment. No, you don't even know what the revenue is. Do they have growing revenues? Do they have decreasing revenue? What's the story of the company? What has the CEO said? Are you listening to those conference calls? Most people aren't. But don't worry about it. I'm going to change it. I'm going to change that for you. He said, be on the lookout. Yeah, you're right. Alvin said he will. Jim said, wonderful and informative response on my question. Thanks you, Prince. Thank you, Prince. Jim, I appreciate that. All the way out there from Toronto, Canada. All right, Herloon Financials. A stock that I've been watching for quite a while is IEP. What are your quick thoughts? Okay, let's look at IEP. IEP. Oh, no. No. Come on, you serious right now? I already know that's from Bill Icahn. Come on, Harloon. Bill Icahn has been struggling during a bull market. Come on, man. Hopefully my stream is not dying down on me. But yeah, don't do that. Right? I would not do Bill Icahn. I mean, look at it. It was struggling during a bull market while everybody else was doing fine. I like Berkshire Hathaway better. It has performed better. I understand the company better than the Icon Enterprises, IEP. So, and I can say that real quick. As soon as I typed in the symbol, somebody asked me that before. I'm kind of weird like that, where I can see symbols and already know who they are. No, that's not a company I like. It's an investment firm, and that's my question with that. Stephen Johnson said Ron Washington. Who is Ron Washington? I haven't heard of Ron Washington. Kevin said, wouldn't XPXL be good over time, though, as the stock market goes back up again? Yes, it will be. But the thing about XPXL, the volatility it's good for short term, because I know the logic is, hey, I can just load up on XPXL and just get 3 times the market. When you have that, because the market goes down. In order for XPXL to be very valuable to you, what you have to do is you have to buy it when the market goes down. Like every dip, you got to buy the dips along the way. If you're buying the dips along the way, yes, it will outperform the market in most cases, right? That's the only way to make that I've seen with being around XPXL a while. You got to buy the dips. Patrick, what's going on, Pat? Patrick Clark out there, he says, when do you think we would get to the bottom? I think we're going to get to the bottom around this summer. Well, we're seeing all of the coronavirus cases. We're seeing all of the companies shut down. I think that we're going to have to see unemployment spike. Unemployment has to go up because all these companies can't just pay people without getting paid. So that's going to hurt companies. I think once those companies start to report those losses, when unemployment starts to shoot up, real estate starts to fall down a little bit, I think that's when we're going to get closer to the bottom. And I think we're nearing the bottom. I think the bottom will be, the absolute bottom is 15,000 on the Dow, somewhere between 15,000 to where we're at now, 18,000. So we're getting very close to the bottom, and we're going to probably hang around here for a little while. We're going to probably bounce around before we start to jump up, right? Before we start to make our way back up. So bear markets don't last that long. On average, bear markets last about 14 months. So by next summer, the bear market usually is over by then, if we last that long. The fastest the bear market has ever gone has been 6 months, which just meaning by this fall. So I'm thinking about this summertime as we're going to near our bottom. Jim, how often do bear markets kill companies? For instance, Under Armour has problems and has been dropping. Are they in big trouble right now? So, Jim, the thing about it, when you look at bear markets always slow down companies in general, right? Everybody's going to get hit harder in the bear market, of course. So when you look at the things around the globe, don't be shocked about what you see happen. But this is exactly what happens in the bear market. Everybody's struggling. It's a recession. Okay. Keisha said that beta number is a good indicator about the volatility in a good or bad market. That's true. She's talking about the beta. The beta compares how that stock moves compared to the S&P 500, right? So it's this how volatile is that stock. I want a very volatile stock. So when it goes up, I want to be able to make money. Did I freeze? Okay. Guys and girls, y'all comment if I'm slowing down because my feedback is looking like I'm kind of freezing up a little bit. Amber said XPX. See, look at that. Amber, she's a smart young lady. She remember that XPXL is at $27. Remember when we talked, how much was when we talked about it, Amber? I think it was at like what, 16, 17, 18? Now look at it today. Patrick, he said, what do you, okay, I already went over that one. Modern real estate, what do I think about Halibut? I'm not sure. Oh my God, I'm sorry about that. Stop sharing. All right, give me 1 second here. Can y'all hear me? One second. Okay, I'm back. I don't know what happened on that. Okay, I'm back on that. I'm sorry about that. I don't know what happened on that. I'm not sure what that company is. I'm not sure what that particular. Can y'all hear me? Y'all give me a thumbs up if y'all can hear me. He said I'm sticking with Ford. That's a good. That could make it. It could make it through. Make sure you're buying down on the other side. Got to look at the balance sheet. Being Kong, you're 100% correct. Boeing, I think Clayton Green. What's going on, Clayton? They're from my hometown from Facebook. Give us some more time, Clayton. Give us some more time with and give me some thumbs up as y'all come in. It's going to Boeing. Yes, Boeing is a good investment, but I think y'all going to get a better price if you're just patient. What are your thoughts on NXXT? Okay, let's give it a quick look. I don't know what happened there earlier, y'all. I'm sorry about that. NXST. Next Star Media Group. Okay, got a nice little PE ratio. Publicly traded American telecommunication in Irvine, Texas. Revenue of $1.1 billion. $46. I'm not very familiar with that industry, but from a quick view, it's a profitable company, pays a nice dividend. Let's see how it has performed here over the last 6 months. Okay, it's been having a downturn. It was up to $128. Wow. Just last month, and it's been shedding. So that company's doing a little bit deeper dive into that one, streaming. 31 watching and only 11 thumbs up. Come on, hit the thumbs up. Appreciate that, Al. Appreciate y'all hit the thumbs up button. So Patrick says, so what that being said, how do you feel about doubling down on Apple and Microsoft? I feel it's a very smart move, but I think you should wait on buying. I think we're going to get some better opportunities as time goes on. He said, yeah, you're freezing, but your voice is good. Okay, I'm back. Am I back now? Can y'all see me? Y'all let me know, can y'all see me? He said, frozen stream. Yeah, my stream was frozen. I froze, so I had to go out, come back in. Yeah, Jim, yes, I have written books, but it's children's books. You know, I've written 3 children's books titled Wesley Learns. Wesley Learns to Invest, Wesley Learns about credit, and Wesley Learns about insurance. That's behind my son. Amber said the stream is good. Okay, hopefully I'm unfrozen now. Yes, NXST is looking real good. I got to write that one down. You know, as far as it's falling. He said what Amber said. Okay. Al hit the thumbs up. Appreciate that, Al. Thanks. That's Al's the thumbs up man. Making sure I get the thumbs up. I appreciate that. Okay, everybody give me thumbs up. So I'm back. Okay. Good thing I'm back. What Al said. Appreciate that, Jim. We hear you now. Great. I'm back. Okay. Woke one. He said I'm back. Thumbs up. Thumbs up. Thumbs up. Everybody give me thumbs up. HAL. Let me look at HAL real quick. HAL. So when I'm looking at a stock real fast, right, especially at this time now when everybody is struggling, I want to see how you was performing in the bull market. Come on, man. Al, why are you even going to send me that? This company's not even profitable. I don't want to deal with that's too much of a risk right now. Yes, it's paying a 13% yield, but you got to know the difference between a dividend and a dividend yield. For prime example, let's do a quick lesson on dividend versus dividend yield, right? So what happens is, let's say if a company, let's say Prince Dykes, say my name is Prince Dykes, I'm selling the stock for $10 and I'm paying a $1 dividend. If my stock price is $1, let's do it easier. Let's say let's go ahead and do it this way. So my stock price is $10 and I'm paying a $1 dividend. That means I have a 10% dividend yield, right? Good. So if my stock drops from $10 all the way down to $5, but I'm still paying that $1 dividend, my dividend yield is what has gone. I think I gotta look that up. But you see how my dividend yield is going to go up. I don't know the exact number off the top of my head, but my dividend yield is going to go up. So my I don't want to give out bad information either. So let's say my dividend yield now may be 20%. Because of the stock price drop. Doesn't mean I'm paying more dividends. So dividend yield moves when the stock price moves. On the reverse end, let's say if I'm paying, my stock price is $10 and I'm paying $1 in dividends. And as I go up, let's say if my stock price go up to $20, now I'm no longer paying 10%. I'm now paying 5% in dividend yields. So as the stock price go up, dividend yields go down. But as the stock price drop, dividend yield goes up. So know the difference and know when you see it in dividend yields. Don't get so caught up on it, all right? So that company there is paying a nice yield, but why do I care about your yield when you're not profitable? Cut the dividends, make the company profitable, right? It's just why I like to invest into companies that are not startups because they're already proven. Because when you have a company that is having a hard time turning a profit, that means that their market could be highly competitive, and they may be slacking on a competitive advantage. So in this market right now, as crazy as everything is going, if you're not turning a profit, I'm scared. I don't want too much of a risk for me. Appreciate that, Kevin. Paris just joined the stream. Thoughts on the BYND? I think that sounds like a railroad company. BYND. Oh, Beyond Meat. Beyond Meat right now? No. It was a hot IPO. Not something I'm going to jump in right now. If I already had shares, I will hold them. But it's another unprofitable company that had a hot IPO that I'm not into right now. Not in the bear market, ladies and gentlemen. Okay. So let me jump into the airline stock industry before I jump into everybody else's questions, because I don't want to keep going through everybody else's questions. So, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live from the beautiful state of Denver, Colorado. Today, we're going to take a look at the airline industry, the transportation sector, and we're going to focus in on some companies because we know the airline has been struggling very, very bad, and just for obvious reasons, right? The coronavirus is the bear market is here, meaning the Dow is down over 36%, signaling a recession is to come. People are not working. Hours have been cut. So now people are not flying. You got people shut down their borders. So everybody's been asking, is there some opportunities in the airline industry? And that's what we're going to do. So we're going to skim the surface, but we're going to dive a little bit, but we're going to dive on the surface and to see if there's opportunities in the airline industry. So first things first thing we want to do before we zoom in, we're going to take a look at the transportation sector. So I'm going to share my screen here for the people that are catching maybe the podcast. They may not have the audio, but we're going to first take a look at the airline industry, the sector, not even the airline sector. We're going to take a look at the transportation sector, right? So when we take a look at the transportation sector, the more you deep dive in, let me share my screen here so you guys and girls can follow along. Share. So what I did is the symbol is XTN. That's X-ray Tango November. It is $38 right now. This is the SPDR, the S&P 500 transportation sector. So this is the whole sector. This thing has things like Uber, Southwest Airlines, rental car services, FedEx, Avis. If I'm saying right, Avis, the rental car place. So anything that moves, railroads, things like that. This is the transportation sector, right? So we have seen that right now they're at $38 at their peak. They were about $69 last year, right? So we can take a look right here and go to holdings. We're on Yahoo Finance. And we could take a look at most of their holdings are coming from their top 10 holdings, right? They have Uber, Old Dominion, Freight. They have Avius and Budget, the rental car place where I know them from. Norfolk Southern. They have Expeditors, things like that. So this is some of the companies that they hold. This is 29% of their assets, right? This is the entire transportation sector. If you invest into the sector, it is less riskier than maybe drilling down. We're going to drill down a little bit further. So inside of the transportation sector, you have the airline sector, right? You guys get it? You have the S&P 500, you have the transportation, then right below the transportation, you have the airlines, and right below the airline sector, you're going to have airline stocks that we're going to look into. So the more you drill down, the more riskier it becomes, but the higher your reward can be, right? So this is the entire sector. If you want to get into the transportation sector, this could be a way you can invest into the transportation sector that is down overall. That's X-Ray Tango November. Do you do due diligence? And you can look inside of here, see what companies they're holding. You can see how much they are down and will this sector rebound, right? So next, what we're going to do inside of the transportation sector, we have the airline sector. So one of the first things we can do here, we can type in JETS. That is, what is the J? Jack, J for Jack, E for Echo, T for Tango, S for Sierra. You're going to type that in. This is a ETF that's $12 right now that follows the industry of airlines, right? So we're going to look at their holdings. So their top 10 holdings are companies you probably heard of. 70% of their top 10 holdings are Southwest Airlines, Delta Airlines, United Airlines, American Airlines, JetBlue, Alaska, Sprint. Is that Sprint or Spirit? It's Spirit. Flew on Spirit before. Oh my goodness, that was. I don't know. Anybody fly to Atlanta, they have the slowest time with the bags. I don't know who works in baggage claims, but whatever the case may be. But anyway, this is the airline sector. You can purchase this ETF, JETS. If you invest into this sector, what this does is, so far this year, this sector is down 61%. Year to date, this year, this sector is down 61% because this is where all the airlines are. If you invest into this sector, it will make it less riskier on your portfolio. So you got transportation that was at the top. Now we're drilling down to the airline sector, ETF called JETS. Now we're going to look at individual stocks in that sector. All right. Now we're going to go to its top 3 stocks. We're going to go to the top 2. The top 2 in this industry, according to market capitalization, is your Southwest Airlines and your Delta Airlines. So first, let's take a look at Southwest Airlines. And I'm not going to go through everything in very detail. I'm just going to talk you through it because I've already done this and I don't want to go back and forth, but it's still great information. So the first thing is Southwest Airline right now is trading for $33 a share, right? And it has a dividend yield of 2.25. So a 2% dividend, and it's trading for $33.53. So we're going to go here to financials. You're going to click on the financials. Click on the financials. So when it comes down to finances, you pretty much have 3 statements: the income statement, balance statement, cash flow statement. So first thing I'm looking for, I'm going to look at total revenue. This is telling me how much money does the company make. Is the company making more money over time, or is it making less money? So here on Yahoo Finance for the free version, they're going to give you 3 years of looking back. Over these last 3 years, you want to go back at least 5 or 10 if you can, but 3 years is fine. So now, are they making more money or less money? Yes. They have a total revenue of $22 million as of 2019, $22,428,000, which you can see. This is what my blue highlighter is on, right? And you can look at all the way back to 2016 where they had 20 million. So do they have a nice growth? Yes. In this same category, Delta has more. Delta has 47 million, right? That's the gross, right? Gross revenue or just total revenues coming into the company. Now, we all know it's not about how much money you make. It's about how much money you can keep. So another thing that I can look at. So this is how much money the company is making. Interest expense, where the blue highlighter is here. They're paying $82,000. They paid $82,000 in 2019 in interest. And usually that's a good indicator of how much debt is on hand. Southwest has paid $82,000. But Delta has paid $301,000. So I want y'all to take a look at it. We're going to look at Delta and we're going to go back to how much interest they paid. This is a good indicator of how much debt is on hand for the company. So right now I have Delta pulled up that's trading for $22. We're going to go to financials. I don't want people to think I'm just making something up. So you can do this yourself. All right. You see that same number right here? They're paying $301,000 in interest. That's telling me, let's say if you have a credit card that's maxed out that you owe $100,000 on, so you're paying $1,000 a month on this credit card. So that's telling me how much debt is on the company. So when we look at the debt, Southwest Airlines have 1.8 million in debt, and Delta has 3.8 million in debt. So Delta has more debt. So total revenue, Delta wins in total revenue. When we look at how much debt is on hand, Delta carries way more debt than Southwest. Next thing we're going to look, we don't care about how much money you make. It's not about what comes in, it's what's going out. So we're going to look at what is the net income. Great, you made all this money. How much money are you able to keep? So the net income after all of the expenses and taxes and operation and salaries, how much money do you have? Delta has 4.7 million, as you can see here. And Southwest Airline has 9.8 million. No, I'm sorry about that. They have 2.3. So Southwest Airline has 2.3. Delta has 4.7. So Delta has a better net income. They do a better job of keeping the money that they make than Southwest Airline. Next thing is we're going to look at the network of the company. How are you going to find a network? We're going to go to the balance sheet. This also can be used to know your assets minus your liabilities. You want to see how much somebody is worth, right? So when you stroll down here, you look at the total assets of 64 million, right? Are the assets growing or decreasing? They have 64 million. And then we're going to look at their total liabilities, which is 49 million. You add and subtract that, that should come out to your total shareholders' equity, which is 15 million. So Delta Airlines, after you subtract his assets versus his liabilities, has a net worth of 15 million. Southwest Airlines has 9.8 million net worth. So Delta has a higher net worth. Let me make sure I write that down. I forgot to write who won that category. Now, we got to look at another important indicator. How much cash do you have on hand, right? How much cash does the company have on hand? So total cash. I like to see a lot of cash being piled up. I want to see a company that's doing so well, money just piling up. They're trying to find places to put it. So right here, you can see that Delta has total cash of $2.8 million versus Southwest has total cash of just 4 million. So Southwest has more cash on hand than Delta. Now, when we look at the categories, who has the most cash? Southwest. Who has the most revenue? Which is kind of not relevant, but both of them have growing revenue, but Delta has more revenue. When you look at who has the most debt on hand, Delta has the most debt. Southwest has the least amount of debt. So Southwest has the least amount of debt. Then we're looking at net income. Delta has a higher net income. After all the bills are paid, who's making most money? Then we're looking at who has the better net worth is Delta when we subtract our assets and our liabilities. But when I line them up and I look at who has the most cash, Delta has 4 million in cash. It has lower debt, in the industry, and its net income is not high as Delta, and its network is not high as Delta. So that kind of puts them in a type comparison. But Southwest is $32 right now, and also Delta is $22 right now. But a big category that I'm looking at is how much debt is on hand. So that's a quick drill down, right? That's a quick drill down of what we're looking at with these particular companies. So let me turn off that remove the screen share. All right. So that was a quick drill down of Delta versus Southwest Airlines of finances, right? So when I look at those two companies, it's a very tough categories. I haven't written down here that y'all see me writing on my little, I do study and research. If I had to make an investment on one, because they're so close, I would probably go with Southwest, right? Even though I don't like how much, even because they're so close, but Delta has a lot of debt on hand, right? That's a lot of debt that I'm not really too keen upon them having. So that's one of my things that I look at with the airline industry. Even though, and we're going to go back through it. Southwest has the most. Southwest has the most cash on hand. Cash is very important, especially in a time like this, because when you become cash strapped, you know, how long can you live on that cash before you're out of business? If you don't get a bailout or something like that. Total revenue. Total revenue is not that important to me. It's just telling me I'm just concerned that they're growing. Both of them have growing revenue. But when I look at net income, Delta has a higher net income. They're doing a better job of keeping what they spend or what they bring in. So it's just like if you got two families, one family make $100,000, but another family makes $50,000. But the company, the family that makes $50,000, they do a good job of living within their means, and they're left with $20,000 over a year, versus the family that has $100,000, but they're only left with $10,000 once they pay for their extravagant lifestyle. So that's why that's important to me. I'm looking at growing revenues. Both of them have growing revenues, but Delta wins that category. So I would give cash to Southwest, Jet to Southwest, net income to Delta, network to Delta. The reason why I'm wondering about the net worth, because I'm looking at the net worth versus the price. But in this case here, I will probably go with Southwest due to the fact of, Delta has a lot of, even though their network is higher, they have a lot of debt. I don't like that much debt. That's a lot of debt compared to what you call it. So let me know what y'all think of that. All right, let's get back to some of y'all questions here. I'm gonna stroll down and come back up here. Let me see what we got here. Here we go. All right. I think I gave it on a BYD in Paris. Kevin, thoughts on TPR? Let's go take a quick look at TPR. TPR. TPR stock. But that's a close tie, though. That's a very close tie. Okay. Energy company. They've gotten beaten down pretty bad. They're profitable, pay a nice dividend yield. Let's see how they perform this year. What? Is this a new company? Why is it saying no charts available? Is this a new company? Did this company just IPO or something? Oh, there we go. There we go. I'm sorry about that. There it is. Okay, now it's going. All right. So it was at $57. And everybody know this will be one I would keep on my thought timeline, because energy has gotten beaten down drastically by what you call it. They have gotten beaten down. That's the biggest sector. I would keep it there, but I would compare it to the top three in the sector, just like I compared Southwest to Delta. If it was a new airline stock like a JetBlue or something, I would compare them to the big boys, because if they're not performing like the big boys are, then I'm just going to jump with the big boys. So I didn't get into gross margin, profit margin. I didn't drill too deep, but that was a nice little synopsis of looking at those two companies. Al said, "Yes, I see you." It was over $25, and it's almost $5 now. HAL. Okay, I think we spoke about that one. Michael Bott, what's going on? He said, which one is a better buy, TTD or AMD? Let's see. Look, I know what AMD is. Let's take a look at TTD. I'm not very familiar with them. TTD. Ooh. Okay. Trade Desk. Trade Desk is a global technology company that markets software used to digital ad buys to purchase driven advertising. Okay. No dividend, high PE ratio. AMD. Are they in the same sector? Let me take a look at this. AMD. Okay, both of them are profitable. Both of them have pretty high ratios, but it seems like that industry have a high ratio. Let's take another look. The trade desk. Their next earnings. What? February 27th. That's already passed. Wonder why they didn't put that on there. Let's take a look here. Volume 1.86. $704. What were the max? Let's go back a year ago. Wow, there was $300. Okay, I'll have to look a little bit more into that, into this one. Just a quick. Both of them are profitable. Both of them have a nice PE ratio. I'll have to do a deeper dive on that one, Michael Bot. Thanks for tuning in, though. I have to do a deeper dive on that one. I have to look at I have to pull open their finances. I have to see, just like what I was just doing, looking at the total revenue, looking at growth profit margins, looking at the net income, looking at who's paying what in dividends or whatnot. You know what? And I'm gonna show y'all something real quick. Also, that kind of ties into Delta. I want y'all to see this. Oh, let me share my screen again. I want y'all to see how much dividends could hurt a company. Let's look at cash flow. Where is it in here? Debt repayment. Yes. So here they go, $980,000, almost $1 million paid out in dividends. That's what Delta paid out. They're paying out, and their dividends are rising. That's great, but look how much money they're paying out just in dividends, right? And I forgot what time frame. Oh, this is as of December of last year, right? So annually they paid $1 million in dividends last year. So what could that money do for growing a company? So that's why sometimes I don't get too crazy about people saying, hey, dividends are great and awesome. Can you give a quick understanding of the PE ratio? That's what Herloon Financial. I don't really pay attention to a lot to the PE ratio. One thing I did take from that book that I just did a book review on, I'm trying to think what was the name of his book, Unstoppable Prosperity by Charles Payne. He doesn't look at the past. He doesn't, because the PE ratio is the last 12 months. He likes to look at the future PE ratio, right? So the PE ratio is giving you the price to earnings. It's telling you the price of the stock compared to its particular earnings. But it's giving me the earnings of the last 12 months. And, stocks are based off of the price of what it's going to be in the future. So I'm looking at, is it a growing PE ratio? I don't really get too caught up in it. I used to look at it because people say, hey, look at the PE ratio. That'll tell you something's overvalued. But that's like taking a look in the rearview mirror. And when looking in the rearview mirror of investing, it's always clear, but I like to look into the future. So I like to look at, has the earnings been, simple things. Are you making money? How much money are you making? And now that you're making money, how much of this money are you keeping? Those are things I like to look at. So I don't really get too crazy in the PE ratio. Bling Kong, where you from, Bean Kong? He said, do you think the stimulus bill gets signed this week or not? I think a form of it will get signed. I mean, this is classic lagging indicators. After something happens in the market, Congress get to going back and forth and trying to figure out the best plan. Everybody agrees. Nobody's out there saying no stimulus. Everybody's agreeing to a stimulus, but just the form hasn't been agreed upon. So typical politics, just like when you see the government shut down, you will see people come along. Jim said, I also write. Oh, nice. Out there in Toronto, California. Not Toronto, California. Toronto, Canada. He said that he writes children's books as well. Cool, Jim. What did you write your children's books on? Stream It says, do you think the cruise companies are going to get a bailout? If so, what are your thoughts of RCL and CCL? RCL and CCL, those are, I'm not familiar on RCL, but I know that they're cruise line. I think it's Carnival or whatnot. Carnival and RCL. Do I think they'll get some form of bailout? I do think some form of, we did it for the automotive industry back in 2008. So why wouldn't they? Government's talking about they raised the interest rate to zero, And I saw a guy wrote a very interesting perspective. He said, hey, look, you should be able to borrow money right now at rock bottom prices instead of getting money from the public. So that's the way I look at it. So do I think they get a bailout? I think they'll get some form of relief. Yes. Patrick, are you familiar with futures and forexes? Of course. I traded futures before. I traded forexes. Forex is a currency exchange market. It's good for people who know how to trade. It's a 24-hour market. I never had time for a 24-hour market. I did it for a little bit where you trade currencies. I know some people who's doing very good at it, but more than 92% of people will fail at it consistently. If you're someone who likes to trade, give it a shot. You might be very good at it with buying the pips and stuff like that. It's another form of not investing per se. It's more on the lines of trading. You know, you might become a good trader and know when to buy pips and sell pips and all of the good stuff like that. 24-hour market, foreign exchange. I think the US dollar used to pair with the pound, I think it was. But yes, futures market, very risky. I never really, I just found it was more profitable ways with option trading. I just liked it when it came, because those are derivatives. The futures market are not really derivatives, but they're kind of derivatives. You're betting on the future or where the market is going to be in the future. But I just looked at it as options just did better than both of those to me. I didn't have to worry about it as much. So I just know better ways to take advantage of stocks and moves in the market, versus buying a future. I mean, that's me. All right. Oh, Tony Knight. There we go. You said, yo, brother, Tony Bone from DC. There we go. Okay, Tony checking in live. Okay. I know I'm a little bit behind on the comments, but hopefully I'm not too late. Bling Blanc, he said the price of the share come. Okay. Yeah, he's giving out that is the definition of the PE ratio. The PE ratio is the price of the share versus what the current company actually earns. That's right. Dion says TDD has been a good buy. They're going to get hammered some more. I think they're at 170 something we just saw. Just wait. Wait a little bit more. Modern Real Estate says yes. He said the closer the PE ratio is to 1, the more valuable for the money of an investor. The farther away, it's more like the stock is overpriced, overvalued. That's a quick way people to look at it, but you have to be careful with PE ratios because you have to compare PE ratios to their particular industry. Just like when we looked at the trade desk and we looked at AMD very quickly, their PE ratios was 130, right? That's extremely high. But in that industry, it seems that's how the P ratios are. So you can't compare Microsoft to Coca-Cola, right? They're in two different industries, so the P ratios, the average P ratio is different. So keep in mind the P ratio changes depending on the sector you're in. Paris says, thank you, brother, for answering my question. Okay, no problem. Anytime. Jay, stay hip. BA is definitely an opportunity. But yeah, I think it's an opportunity. Jay, stay hip, but Jay, stay patient. That's what it's going to be. Stay patient. I think today they went down to 80 something dollars. I'm not sure. They was just at $300. The whole airline industry, there's definitely opportunities in the airline industry. There's opportunities all over the place, but just be careful and be a little bit more patient. Just like when I said a couple of weeks ago that the Dow was going to bottom out around 19,000, and everybody was like, "Oh, 19,000? What do you mean?" I'm like, "That's the top of the bottom," and now we're at 18,000. So just stay a little patient. I think we got a little bit more shaking out to do. I'm going to get back into BAC, which is Bank of America, for a long term. Going to wait to see if they can get under 20. Yes, I was a big time buyer in the Bank of America, and I sold it at low 30s, high 20s to buy something else, or just to move the cash to be able to. I just took the profits off the table, even though it was very good profits for a long time. Pretty much the stocks rise have pretty much been wiped away by the Trump presidency. Not by the Trump presidency, since the Trump presidency, I meant to say. Start buying them at around $7. You talking about Boeing or TDDM? Dion, are you talking about TD? You brought TDM for $7? If you did, awesome. OKTA has been holding well too. Jay stay hip. Spirit is the true fam. Open menus. I don't know what Spirit you rode, but I don't flew on so many airlines. I don't even know who is who. But I know I got to Atlanta one time. I think it's Atlanta because I flew to Atlanta on another airline recently, and it felt like it took 5 hours to get my bags. It was like 2 hours to get all the bags. I don't know what's going on. I don't know if people be down there like making beats, rapping, or they be in a cipher or something. But I'm like, man, every time I get to Atlanta, man, it's like, man, where my bags at? I'm there waiting for like 2 hours, standing up, and I, flew on two different airlines. At first, I thought it was like Spirit, but then I couldn't realize, I was beating down Spirit because I got on another airline that had the same problem. Yeah, Spirit is definitely cheap. I would give you that, Jay Stay Hip. Keisha, thanks, Jets. It'll be on. Thanks for Jets. Watch list for that one. Okay, cool. So y'all got to see how I did there. We start off with transportation, then we went to the sector, then we went to the subsector. So the sector was transportation, the subsector was airlines, and inside that airline we looked at individual stocks. So as you drill deeper, that's where you find the oil, but you're also taking a greater risk. Because someone who purchases the transportation ETF versus someone who purchases Southwest Airlines stock, the person who just purchased airline stock, Southwest Airline stock is at a greater risk than the person who just purchased the whole sector. It's the same thing if you get the Jets ETF versus the XTN, which is the sector ETF. The person who gets just the airline sector versus the transportation sector, the person who got the airline sector is going to have a greater risk. Those numbers are in millions. Did I say something wrong there, Herlone? I'm guessing when I was reading out my, what you call it? Maybe I did mispronunciate those numbers there. Doubled my money and bounced. Oh, nice. Nice. Awesome. Jim, as someone that grew up in the inner city, I wish this was taught to us from an early age. Prince, thank you for the class. Sincerely appreciate it. Anytime, man. Anytime. He said, Harlan, they don't teach this for a reason. This is how they get wealthy. Miss Butterscotch is in the building. Good afternoon, Miss Butterscotch. Nice to see you. He said hello to her. Okay, I'm a little bit behind. Current ratio calculations helps. I don't know what you mean by that, Kevin. Well said, Harloon. Boeing is about to be my best friend. Oh, yeah. TPR. Oh, my bad. I'm sorry. TPR. Okay. I'm sorry about that, Kevin. Let me look at the TPR stock then. I looked at the wrong one earlier. Ooh, low PE ratio. Luxury Fashion Holding Company in New York City is based the parent company. Oh, so they own Coach. They own Kate Spade. Okay. Oh, luxury brand fashion. They also so they own Coach, New York, and Kate Spade. I've seen those around. I don't purchase some of those. Okay. Nice PE ratio. Nice low PE ratio. I don't know why we're getting stuck here. Could be a good opportunity. That's not a bad one. I would take more deeper dive into it. Look at his sector. I don't know his sector that well. Willie T. Parker. What's going on, Willie T. Parker? What stocks are you buying during this crisis? Right now, currently, I'm not buying anything. I'm taking advantage using some leverage ETFs here and there. But right now, I'm waiting. I'm waiting to this on April, the first week of probably about 2 weeks here. We're going to get the unemployment numbers. I think when the unemployment numbers come, and then we see some of these corporate earnings come out in about May timeframe, when we start to see them dial back in and start telling us how big these losses are. And I think that is going to drive us towards our bottom. We are in the bottom range right now. The last time I looked at the Dow was at 18,000. So I'm kind of waiting until we stretch that bottom, and then I'm going on a looting spree. In the meanwhile, I'm saving up cash, moving money around, making sure money is available to be able to purchase. But companies that I like Apple, I like Microsoft, I like Google. Right there in the airline stocks, you got some airline opportunities, but I'm not going to stretch myself too thin. So I'm liking companies that have a high beta, not very high, but a nice size beta in a beaten up sector. Beaten up sectors are energy, technology, and finances. Those are the ones that are leading the pack of getting beaten down the most. So when they rebound, these are great companies that are going to rebound. Like Boeing is going to rebound. Boeing is going to rebound when the airline industry is going to come back. Tesla, I don't know about Tesla, but I know Apple, Microsoft, Google. Those are my guys. Those are my guys. Berkshire Hathaway. Those guys are going to, I don't see Berkshire doing extremely well when we bounce back, but they're gonna make their money. Michael Bott said, "Thanks, Prince. Anytime, Mike." Kevin, how do you think the government stimulus package will affect the economy? Would that indicate the bottom of the stock market? No, I think that I'm looking at, they always do stimulus packages. It'll take a while for the stimulus package to take effect. I think that I don't think it will stimulate the bottom. I think it still will have some more to do. Stimulus package is not like, okay, you write a check and then boom, the market just turns around. It takes a while to set an effect. It takes a while to, for the economy to kind of shake off the jitters, right, to get back. So it signals that we will rebound. I look at that. I know we will rebound. I mean, it's something that's done every time, but it's definitely not the bottom. How do I think it'll affect the economy? I think it will slow our drop down to the bottom, but it's not going to stop it. It's going to slow our drop, and it's going to assist in our rebound. That's how I look at it. B. Steph, will the stimulus have a negative impact on the market at first? Yes, I think it will. It'll take a while. It's just like I can't go outside and jog right now and go on a diet for a day. I can't jump on the floor right now, do 30 sit-ups and say, "Where's my six pack?" Right? It's going to take a while for it to take effect. Or, if I went outside and ran a mile and said, "Oh man, why am I not seeing the effects?" It's going to take a little while. That's my belief. So I don't think it'll be first thing, and I think it will slow. It will slow down the economy, right? It will slow down the fall. Coming in from Facebook, Japanese, I think he said. He said, just want to learn about investing in the stock market. Any recommendations on how, and I guess it's how and what to read? Thanks. The things I'm going to look at there, I can't even say your name, but coming in from Facebook, I see you. Japathy, I can't say, I'm horrible. But I would say first grab you, the latest book I just read was a good one called Unstoppable Prosperity by what's his name? I can see his face, but I can't think of his name. Charles Payne. He did that one. You can start with that one. The Intelligent Investor by Benjamin Graham. That's for a little bit sturdy. Tony Robbins has a great one. I do a lot of book reviews, not a lot, but I do a good bit of book reviews as well. So Tony Robbins, 7 Ways to Master Your Money. Those are good starts. The Intelligent Investor, 7 Ways to Master Your Money. Some people say Rich Dad Poor Dad is a good one by Robert Kiyosaki. Hopefully Robert Kiyosaki comes on the show one day. That'll be nice. But those are some good starts. All right, where are we at? Al says, I work for the airlines. We're watching movies, then we go get your bag. Oh, that's what it is. Oh, that's what y'all down there watching movies. I'm up there, my back hurt. Like, man, where my bags at, man? I mean, I understand bags take a little while, but when you go to a large airport, like Denver is a large airport, Atlanta is a large airport. Those airports, it takes you, by the time the plane stops and you get to baggage claims, that's easily 15 or 30 minutes sometimes, from getting on elevators to trains and whatever to get to your bags. Now you get to baggage claims, and then you waiting for another hour and a half. I'm like, man, what are they doing with these bags? So that's what y'all down there doing, watching movies. I tell my wife this, man. They down there watching movies. Blame Prince, you got me cracking up on Spirit Airlines. Man, that's real life, man. That's real life. J Raz 206. Hey Prince, any advice on where I can learn to day trade? Day trade. So a day trader is someone you got to have at least 25,000. Well, you don't have to have. If you want to be considered a day trader, you got to have $25,000 in the account. I like guys like Oliver Velez. He comes to mind. He has some very good trading books out there. You pretty much you're gonna pretty much get an ETrade Pro account or get a TD Ameritrade Thinkorswim. Thinkorswim is free from TD Ameritrade, and you can get that. And you're gonna have to stream in information. What I mean stream is that the information is gonna be coming to you. You're gonna have to see stocks moving by the second, and people set their Bollinger Binders. They buy and sell. They do things like that or whatnot, and that's pretty much it. You're pretty much just gonna have to look at Oliver Velez. That's one guy that I know that I think of when I think about day trading, and there are plenty more out there. And grab some books and go to YouTube University. Go to YouTube University. Don't be afraid to buy some courses, buy some books, read, become a student of the game. Not something I'm too keen in on, but it's not something I look away from. I like to use day traders' technical analysis to tell me when to buy what I'm already looking to buy. So for prime example, I know Southwest Airline is on sale, but I just want to know when to buy it. So I will use technical data to see when to buy it. And that's why I keep telling everybody to stop, wait, right? Harloon Financial's Prince, are you buying any stocks as the market falls, or are you waiting until you feel the bottom has come? I'm waiting. I was buying when we was at 29,000. We got to 28. I'm like, okay, brought some. I brought some at 26, and I brought some at 25, then 24. Then I'm like, hold on, man. When I know we hit that 20% market drop, what I think was like 25%, I'm gonna wait 25,000 on the Dow. I said, you know what? Let me just wait. I'm tired of trying to catch this falling knife. Let's just let this thing hit the floor and let me start buying then. That's my thought process. What do you think, Harloon? Harloon Financials. Jim, long term, which companies do you think is better, Apple or Microsoft? Ooh, that's a tough one. I would have to go with Microsoft. When I look at long-term competitive advantage, I like Microsoft a little bit more, even though I love both of them. That's why I just get both of them. It's just like me, I don't like chocolate ice cream. I like vanilla and maybe strawberry, and you don't butter pecan. I like butter pecan and probably vanilla. So I can't make up my mind. So just give me a scoop of both. That's how I look at Apple and Microsoft. Give me a scoop of both, right? He said, man, Prince giving us game for like 2 hours. I didn't even know I've been on that long. An hour 22. All right. Willie Parker, thanks, Prince. I will follow your buys during the bottom. Oh, yeah. During the bottom. These are companies that I already have. And think about I like about Apple and Microsoft. I'm collecting the dividend. Southwest Airlines is paying a dividend as well. So that's a good thing. So we're nearing the bottom. We're close to it. We probably got a little bit more shaking down to do, but we don't have that much further to go, right? And we're going to be here for a while. So be patient. Build your watch list, save up your money, be patient, right? That they always say, the people that are patient versus the people that are hasty. I'm not lying. Sometimes I look and I'm like, man, should I just sell this? Should I just get out of this? But those are mistakes I made in 2008. I'm not making them again. I'm going to try to take advantage of this bear because it's not going to happen for another 10 years. And well, in most cases, sometimes maybe 5 years. So it's going to be a while before we see another down market like this. So I'm trying to navigate it and play the best way I can with this bear. It's now the time to invest. If you are a day trader, it don't matter. I know you just asked the question, JRez 206. It doesn't matter if you're a day trader because a day trader just takes, you're just trying to make money. You don't care about Apple's earnings and finances. You just care about technical. You're looking at red. You're looking at red and green. You're looking at candlesticks, and you're trying to make your position, and you're out of it in 30, 40 minutes or an hour, right? That's a day trader. You're there. All you're worried about is today. You're not worried about tomorrow or anything else. You're worried about today, right? That's what most day traders look at. So I will wait. So, but if you are a fundamental investor, it's definitely nearing the time for you to start investing. Yes. Fundamental, technical person, they're just a technical day traders looking at what's happening for the day, the next 30 minutes, the hour. That's it. versus a fundamental person is looking at finances, things like that. There's someone who's looking for the long term. All right. Yeah, Miss Buttercup said, "Where's my six pack?" Exactly right. You can't jump down here and just do 30 sit ups and be like, "All right, well, where's the six pack at?" No, just because they write a stimulus package don't mean it's going to stimulate the economy tomorrow morning. It's going to take a little effect. Just like now we're in a bear market, we move it into a recession. It don't happen overnight. It takes a little while. We've been going. The stock market has been falling now for 41 days. Right? Did it happen overnight? No. It's going into 2 months now. Boy, y'all get me today. Okay, JW, do you think it would be best to have money waiting in your brokerage account? Yes. Put your money in your. You don't want to be like Kevin Hart said in his joke. You don't want all the. It's time to buy. You're like, oh yeah, all my money. I got a checking in the savings, and all my money is in my savings. Then they got to go to my checking. Then they got to get to my brokerage account. Then I can buy. No, put it in. Put it over there in your cash. Have it ready to go. Build it up. What you can do now. J Raz didn't mean day trade. My bad. I meant to say options trading. Yeah, option trading. Um, the best way to learn option trading, you have to follow people here on YouTube. It's a bunch of option trading platforms. Option Alpha is a good one. But you just have to study the game. Tune in to YouTube. I would say you have Facebook, YouTube, and Instagram to follow all type of people that option trade and just do that type of good stuff. So do that. Buy some books. Follow people. Buy some courses. Buy some books. Become a student of the game. Know what a call is. Know what a put is. Know what buying a call. Uncovered, covered. Know what a covered put is. Selling a put. Buying a put. Um, how many shares go into a contract? Know what a straddle is. Know what a strangle is. Know what an iron condor is. Become a student of the game, right? And then get you a fake account. When I mean a fake account, I mean get you a virtual account. So you can do that with TD Ameritrade with Thinkorswim, if I'm not mistaken. You can pretty much, or you can do that with ETrade. Build a watch list and pretend you brought a call, pretend you brought a put, and then see what happens to it. All right. So yeah, that's the way you can do it. So don't use your money, use fake money. Harloom said, other than Apple, Google, Microsoft, Berkshire, what are other couple other stocks? I like the airline stocks too. Right? It's a bunch of them out there. It's a lot of things on sales right now. Harloom Financials, you're looking at Southwest Airlines, you're looking at Delta. Those are two other ones in that sector. You got to look at it too. So those are some other ones I'm looking at. Al, is it true you need $25,000 to day trade? They will get you on the PDT rule, which not let you trade for 90 days. Yes, you will need $25,000 to day trade. What they PDT is the pattern day trader rule, and that means that if you are, let's say, if I brought a stock this morning and sold it this afternoon, that's considered a day trade. If your account is under $25,000, that's a strike. If you do that 3 times, they're going to put you on PDT. So let's say if I bought a stock today, sold it today, made a profit, and I'm under $25,000, that's one strike. If I did it again on Tuesday, that's 2 strikes. Then they're going to send me, they're going to say, hey, you do this one more time, we're going to lock your account out for 90 days. You do it again, they're going to lock your account up. Now, the way to get around it, what I do is I buy my stocks at the end of the day today, right? What time is it? Market's closed yet? Yeah, the market's closed. Man, I've been on this thing this long. Goodness. But the market will close today. And when the market closes, I buy mine right when the market's closing on Monday, sell it on Tuesday. That's a whole nother day. Then I don't get caught up with bait. That's the way to get around it. So if you buy Apple on Monday, sell it on Tuesday, that's not day trading. And you can do that if your account's on 25,000. All right. Amber, I'm trying to wait out the bottom. Getting my money right, I'll be ready. Smart young lady. Smart lady. I really appreciate all the Alvin says, I really appreciate all the knowledge, Prince. I got to get back to work. Training never stops. Hoorah. Appreciate it, Alvin. Al, gotta go. We'll catch you later. Take care, everyone. Thanks, Prince. Have a great day. All right. Kevin, can I give you a tweet or notification when you think the bottom is can you give us a tweet? I'll probably be on live. Right? Y'all just stay tuned. Follow me on Facebook, Instagram, On the Investor Show on Instagram, on Facebook, I'm Prince Dykes. Follow Prince Dykes NBA. That's my public figure page, and I got my own private page, not private, but only regular page, or whatnot. Then I got Royal Financials, the Investor Show, and y'all just stay tuned in. You will. Kevin, you keep saying bottom is near, but then you say May or June. Can you chill for a few weeks? Yeah, it's near. It's near, but then it's why I say May. Think about it. May or June is what? That's not too far from now. We may get there faster than I expect. I'm saying May or June, but the bottom is near. We at 18,000. The lowest straight bottom is 15. So we get to 15 and whatnot, then I'm looking at the numbers. Then also I'm looking at the sentiment of the market. Like, what is the market telling me as well? All right. Antonio said Boeing, nice. Nike, that's another good one. But we're going to get better prices if we're just patient. But okay, that's going to conclude today's live broadcast. Appreciate everybody for coming in. This is probably one of the longest casts I ever done, 1 hour and 30 minutes. Sorry for the little blunder in the middle, but we got it. All right. So we will be back. Thank you guys. Love y'all. Thank y'all for tuning in. Until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe. Peace. Be safe. I'm out, and thank you.